What if I told you one of these can make you rich and the other can make you broke? If you don't understand it, real estate or stock market, which one actually makes more money? Stay till the end because the answer might surprise you. In the USA, millions of people invest in real estate and stocks. Some become millionaires while others lose money. But the real question is, which one is better for you? Today we will compare money potential risk, passive income and long-term growth. Real estate means buying property, like houses, apartments, or land. To make money, you can earn in two ways: rent income and property value increase. Stock market means buying shares of companies. When companies grow, your money grows. You can earn through stock price increase and dividends. Now let's talk about money. In the USA, real estate gives around 8% to 12% yearly return, but the stock market can give 10% to 15% on average. But here's the twist: stocks can grow faster, but also fall faster. Real estate is more stable. Prices don't change daily, but stocks move every second. This means real estate equals low risk, slow growth. Stocks equals high risk, high reward. Real estate gives strong passive income through rent. Stocks also give passive income, but only if they pay dividends. So if you want monthly cash, real estate is powerful. Real estate needs big money to start. In the USA, you may need thousands of dollars, but stocks, you can start with just $10. Real estate needs management, tenants, repairs, time. Stocks, just invest and relax. So, real estate equals active, stocks equals passive. So, which one makes more money? If you want fast growth, stocks, stable income. Real estate, smart investors use both, because real wealth comes from diversification. If you learned something new, subscribe for more money tips. Your journey to financial freedom starts today.